Global data shows that nearly 50% of new businesses shut down within the first 5 years of its operation. On the other hand, publicly listed companies are twice as likely to survive past the 10-year mark compared to private firms. Research by the World Federation of Exchanges also finds that listed companies enjoy on average 30 to 40% of higher growth in jobs and revenue over a decade compared to their non-listed peers. So if you want to build a company that lasts beyond its lifetime, the most sustainable path is to go public. By sharing ownership with the public, you're not only raising capital, but you're also building accountability in your company, governance, and a stronger foundation for long-term growth. So if you think that the cost of going public is probably a lot, the truth is not going public is costlier due to less governance and missed opportunities. I'm Kashfia Binte Hassan, an analyst at Lion City Advisory. At Lion City Advisory, we guide companies through different pathways to raise equity capital as an advisor. There are two particular ways to raise capital. Firstly, there's public offering, and secondly, private placement. Public offerings are 4 types. Firstly, there's IPO, which is initial public offering when a particular company sells their shares to the public for the first time and become listed on the stock exchange of a particular country. That's IPO. Secondly, there's repeat public offering or RPO, when an already registered or listed company issues more share to raise additional fund. Thirdly, there is right offering, when existing shareholders are given the right to buy more shares, often at a discounted price, before they're offered to new investors. Fourthly, there is qualified initial offering, a simpler route for small and mid-sized companies to raise funds from the public under less regulation than a full IPO. Secondly, there is private capital route, in which there's venture capital, which is funding for early stage or high growth startup that needs money to scale. And secondly, there is private equity, which is capital for established but non-listed businesses, which helps them in expanding, restructuring, or acquiring other firms. But here's the key. Choosing the right path depends on your company's stage, strategy, and vision. Public listing provides scale, visibility, and durability. VC and PE brings expertise, but often means giving up ownership and control. And this is where Lion City Advisory adds value. We help you in evaluating which route is best fit for your growth strategy, structure IPOs, RPOs, or right issues that attracts the right kind of investors, connect with venture and private equity partners where suitable, and ensure your fundraising journey is efficient, compliant, and future-proof. At Lion City Advisory, our mission is simple: to turn complex equity financing into simple strategic solution, helping companies grow stronger, last longer, and create impact that goes beyond a single lifetime. For any kind of queries, please feel free to ask us at Lion City Advisory. Thank you so very much.